Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
There we are. Happy Monday.
Yes, sir. Yes, sir.
Had so much fun for Father's Day on the boat. I just couldn't leave.
There you go, man. There you go.
I'm going to work. I have to work from the boat today, Tom. I'm sorry.
That's all right. I wish you would have invited me out. I would have come out to sit with you. We could have done one of these together.
So today's segment is FHA in 15 minutes so you don't look dumb. Realtors, anybody looking to buy?
Okay.
All right.
So I got questions for you. Let's talk about FHA interest rates. Now, I know they're going to change all the time, so I don't need a specific rate, but what do they look like compared to other programs?
FHA is a lower down payment program. It allows for a little bit more marginal credit score, and it allows people to get in that might not fit the guidelines for a conventional loan.
Yeah. So what are the interest rates today for FHA versus any other? Are they similar? Are they a little bit lower?
They're very similar. They're generally running in the mid sixes right now, where conventional is in the high sixes.
Okay, so today they're a tiny bit lower, but sometimes it's the other way around, right?
Correct.
And then you mentioned credit score. What's the lowest credit score that I can qualify for an FHA?
Well, FHA posts that your minimum credit score is 500. Anything between 500 and 580, the borrower is required to put a minimum of 10% down. So it changes the 3.5% rule.
Well, that was my next question. So, all right, so the minimum down payment, as I understand it, is 3.5. What do I need to qualify for a 3.5% down payment?
You just have to have a credit score that's at least over 580.
580, okay.
And
so if I'm over 580 and I qualify all the other stuff, then I can get a 3.5% down payment.
That's right.
Okay, perfect. And then what about income and debt to income requirements? How does debt to income requirements?
FHA posts that your debt ratio can't be higher than 43, but we go up to 50%, even 55% all the time.
Okay. So to help people understand that, just like a really quick, how do I figure out debt to income? Is it my gross income? Is it my net income?
There's two debt ratios. There's a housing ratio, which is your income, your gross monthly income divided into the new payment, PITI, principal, interest, tax, and insurance. And there's a total debt ratio that would be the housing payment, PITI, plus your other expenses, credit cards, student loans, car payments.
So student loans do count towards your debt, right?
FHA has their own formula for student loans, and it's the balance divided by 0.5%.
Okay. So it doesn't matter necessarily exactly what I'm paying. It matters that formula. That's interesting.
Well, if there's a payment structure already in place, the payments are not deferred, then we can use that payment. But if the payment shows zero or they're deferred, you have to use a formula.
Got you. Okay. Now, is there a maximum loan cap?
Most certainly is. And every county has their own limit. They're based on the median income of that area. In our areas, it's $524,225.
That's a decent size home.
It's over $500,000 with 3.5% down. You couldn't get that on any country anywhere. Canada doesn't have it. Europe doesn't have it. We have it.
That's great. Now, we're going to cover down payment assistance here in a few minutes, but what about gifts? What if a parent or a grandparent wants to gift some money for a down payment? How does that work?
Well, they can absolutely do that. Gifts are 100% acceptable. They do have to be documented. You have to document on an FHA loan the donor and the source of where the money came from. So it's a little bit deeper on a gift for FHA than it is on conventional. We don't need the donor's bank statement on conventional. We do need to show where the money came from on FHA.
Gotcha.
But 100% of the money for down payment, closing costs, and everything can come as a gift.
That was my next.
And you can do gifts of equity. If you wanted a parent to give you a home, they can use that equity as down payment, and that's acceptable as well.
Yeah. And I know this is something that's interesting. A lot of people think that there's a maximum gift that you can give a family member, but there's really not. Don't want to get into taxes too much, but there's a certain amount that you can give without a form. And then anything over that, you have to actually supply a form to the IRS saying that you gifted it, and nobody pays taxes on it.
We don't get involved in any IRS business around here.
But just to let people know, don't let that stop you from helping a family member.
I've never had the IRS go after anybody for gifting their child money for a down payment.
That's because it's completely legal. It's completely legal. Totally legal. All right. So now I understand that there's two different kinds of mortgage insurance. Is that right? So there's
one kind of mortgage insurance, but on FHA, it hits you in two directions. You pay an upfront fee, which is 1.75% of the base loan amount.
Okay.
And then you pay 0.55% of the base loan amount on a monthly basis. Now, the 1.75 is acquisitioned into the loan. So that's why if you took $100,000 purchase price, your base loan amount would be $96,500. That's 3.5% down. But if you look at the number, it's $96,500 plus 1.75% of that amount gets added into it and financed.
It's interesting. I don't do a lot of FHA loans on my purchasers, and I just did one. And as soon as I saw the loan amount on the closing statement, I questioned it because I was like, that's not right. That's way too much. And then they told me about that same exact thing. So, all right. So that's rolled into the mortgage. So they don't pay that in closing costs. They pay that in additional principal and interest.
It's financed right into the mortgage.
But then the monthly payment is 0.55 per month?
It's 0.55 divided by 12 per month.
Divided by 12 per month. Okay, so it's 0.55 divided by 12. So if I'm borrowing $100,000, it's $550 divided by 12. So it's about $48, whatever.
Yep.
Okay, got it. All right. So, and then is that permanent? Like, do I have to pay that forever, or is there a way to get rid of it?
You put 3.5% down, you're paying it until you sell it or refinance it to a different type of mortgage.
Gotcha.
However,
so when I hit 20% equity, I don't get to just ask for it to get removed.
Not like a conventional loan. No, sir. But if you put 10% down, then it can go away. But it takes about 11 years. Now, listen, I'm going to tell you, I've run up against people that were so opposed to it because of the permanent mortgage insurance. I'm going to tell you, even if you got a conventional loan and you only put 3.5% down, you're going to pay mortgage insurance for more than 11 years. So don't worry about it. Listen, it's cheap mortgage insurance. It's very cheap. And don't step over $1 to pick up a penny, because that's what essentially you'd be doing by resisting it. It's so easy to get in. It allows you to leverage the money. This is a gift that we have here in the United States that other countries just don't have.
Yeah, no, absolutely. It's fantastic. Now, so what about lender fees? Like, are there additional lender fees?
No,
is it more expensive?
No, whatever the lender charges should be the same on a conventional FHA, VA. They remain the same.
Okay. Now, I know we're not going to cover this, but what about 203K loans? Is that something?
So 203K is a renovation loan, and there's two forms. There's a standard and a limited, but we're going to go into those on a different segment so that it's specific for renovation loans. If you go to my YouTube channel, I've done an extensive YouTube interview with my renovation specialist. So if you go to Bruce Woodburn, the Loan Arranger YouTube channel, you can see them there. But we are going to post them as well, so we hit everything that somebody needs to know about 203Ks. But today, we want to stick with FHA standard because, in my opinion, it's one of the best and easiest loans to get. It's flexible. The interest rates are great. It just gives you so many opportunities to get into a home. I think FHA is one of the best mortgages there is.
Well, yeah, you're pretty excited about them. So
I'm very excited.
All right. So I know we're not covering renovation loans, but what kind of condition does the home have to be in then? Right. So if it needs a bunch of renovation, obviously it's probably not a good standard FHA loan. But what is the condition like? Is there minimums?
So FHA, people get so concerned about FHA and VA when it comes to condition. There's three things that you have to meet with FHA. Same as VA. Safe, sound, sanitary. Safe. So can you have broken windows? No. Could you have a sash that when you open the window, it just falls down so a kid could stick his head in there and it chops their head off? No, we can't have that. Those things are not acceptable. Even screens on the windows are required.
That's actually one that I run into a lot is screens on the windows.
They don't like wood rot. Okay.
Yep.
Because, and the reason wood rot and things like that is that they're assuming that if you're trying to get in for 0 down or 3.5% down on an FHA loan, that you don't have a lot of extra disposable money to go fixing things post closing. So they want to make sure the house is in good condition. Sanitary, like you got to make sure you don't have mold and things like that. So safe, sound. You want to make sure that there's no stains on the ceiling where there could be a roof leak or something like that could cause extensive damage.
Gotcha. Okay. All right. Yeah. I haven't really found too many problems with that other than the wood rot is the number one thing I hit all the time. So how long does the process take? Is it any different truly than a conventional? Or
I hear people saying they need 45 days to close an FHA loan. I've closed an FHA loan in 10 days before. Now, do I like to? No. Does it stress people out? It could. But 30 days is a standard for any of my transactions. My average close time is 28 days across the board.
That's why it's one of the main reasons I use you, my friend.
Thank you.
So what happens if I sell the home like quickly, like in a short time? Because I know this is a homeowner occupied kind of loan, right? You can't buy
only owner occupied.
So what if I have to sell really quick? Are there any prepayment penalties I have to worry about?
No prepayment penalties. And if you sold that house and you wanted another FHA loan, you could get one. You can't get two at the same time unless you're being transferred by your employer at their request 100 miles away.
Gotcha.
Then you can get a second one.
All right. Now speaking of that, let's say I did buy the home and then 6 months later, I decided to move away and rent it out, right? I'm supposed to stay in the home for a year.
You're supposed to, but there can be circumstances where if it's warranted, what you can't do is intentionally buy a property, use FHA as an owner occupied with the intention on moving out in 3 months. That would not be acceptable.
That would be a little bit of mortgage fraud, huh?
I would say so.
All right. So how do I know if FHA is my best option versus conventional or USDA?
Well, typically the first thing we're looking at is debt ratio and credit score. If your credit score is under 725, then I would absolutely consider an FHA loan. But if you have a debt, let's say you have an 800 credit score, but your debt ratio is 51%, a conventional loan won't work. There are all kinds of different reasons that FHA can be more attractive. Not to mention, a seller can pay up to 6% toward your closing costs on an FHA loan, or on a conventional loan with only 3% down. Matter of fact, anything less than 10% down, the seller can only pay up to 3%. So if you went to a builder and they said, we're going to pay all your closing costs, and you tried to do a conventional loan with only 5% down, you'd be leaving money on the table. They couldn't do it. So you switch them to FHA and they get more benefits.
Gotcha. Okay. So last question. If I buy a house with an FHA loan, does that restrict me in the future to buying investment property?
Absolutely not. Absolutely not. I think on my Leapfrog program, which I'm going to be holding this Wednesday in Winter Park at 6:30 at the Ale House, register at WeBringYouHome.com. I'm covering how to become a professional investor and learn how to build a portfolio of real estate with minimum down payment. You come to my class, register right away. I only have a few seats available.
That's going to be on June 18th, 2025. In case you're watching this later, you can't register, but we always run these programs. So
I should have mentioned that since this is going to go on our YouTube channel.
We always run these programs. So go to WeBringYouHome.com and you can always see if there's one coming up. And if not, reach out and ask for it because, again, we're planning them all the time.
Yeah. Bruce, and when Jeanette sees this, she can go ahead and edit that part out. How about that?
Excellent. Hey, we're running up on 15 minutes.
So next week we're doing USDA. Is that right?
USDA next week. You got it, sir.
You won't want to miss it. Got to go. 15 minutes is up.
Make it a great day.